Welcome to TradeTheMBI.com. This is John. This report is for the 3rd of October. Well, continued interesting developments here. Okay, so we had the little positive move from the DOC orange dip below the red line and the move up of green, which was supportive, but coming off the super negative shakeout, like we said, it would be muted mostly to the 23%. Well, now we see on the MBI reading, the MBI red leading. Now, becomes critical because this is usually within the up phase of the first move back up from a shakeout negative, and that often leads to a breakdown that then gives you a higher shakeout reading, which would be your actual breakout. This becomes highly negative in the sense that you're in the middle of what would be the start of their bull move. So there's going to have to be some strong activity to the upside here, coming pretty quick. Otherwise, this is going to break down fast and make new lows. So that's worth noting. We'll keep a definite eye on DOC cyan here as it meets green, because move back up of the cyan where shorts activate and a declining steel. It's problematic. So at least from a bull standpoint, so that pretty clear indication that without a pretty significant rally in the next couple of days, particularly as new fund money comes in, um, the market's in for another down run. So keep that one in mind. That's what we have to see happen in order for things to be on a positive. Now, from an NQ standpoint, so the Nasdaq has been the leader in all of this, and it's slightly above its 23%, but similar activity here with the lead of the MBI white. Now, the green has already started its crossover of cyan, so that becomes significant because a spider there where the green fades back and the cyan continues up, definitely going to lead to new lows. The shakeout has been better, but you're going to have to really see some strong input here from bulls. Otherwise, there's just going to be a continued wave of selling. And what we saw was interesting about a lot of the up moves that started is there were new sellers as soon as the market rose. And part of that is this. As yields continue to rise for treasuries, it puts pressure on the market. Is something we talked about. And this is the recognition that with inflation, for the later part of the year, as well as beginning of next year, going to be rising. The Fed's not going to have many choices, and the Fed doesn't seem all that concerned about slowing things further. They've paused at the moment, but it's kind of necessary because they went really quick, really fast. Oil retracing certainly is a bonus, but you've got to get all the way back down under that 70 range for it to be of any significant impact, because here you're still maintaining relatively accelerated inflationary pressures. So these are all important factors when we look at what the expectations are, and any shock here, none whatsoever, because as much as everyone talks about the dollar dying and everything, you still got to buy oil, at least in the West, from US dollars, and it's got to be converted, and that draws more from euros, not to mention the fact that even with ECB rate increases, it's not even keeping close to what the US markets are doing. And so why would you be in a euro? And this is something we've been talking about, well, even when we were at this fake rally up here at the 112 range. So that's a significant drop, and certainly has an impact from, obviously makes European products cheaper, but what are they producing that's really being exported at this particular stage? The surprise on all of this is the really bashing of gold. I mean, it's been hit hard, and it's interesting because you see the counter reaction from cryptocurrencies have actually held up quite decently within this particular phase, and doesn't look any particular. You're getting, of course, into that automatic bounce phase here as we get to DOC super negative, um, but really perfect control of gold market despite everything you can see as far as inflationary pressures and the effects of it. Now, of course, gold would certainly spike more if you saw a significant economic slowdown. And just the question is, how long can you adjust the numbers until things start to show cracks? From a Bitcoin standpoint, you can see there were major rallies within that. Obviously, there was some selling within there, but um, completely consistent with the embedded readings in that. So, and strong DOC green over cyan, and now cyan below red, which is always a buy. And that's really an interesting bifurcation because pretty much gold and cryptos had been moving in lockstep for quite a while. From an ETH standpoint, it was a lot worse. The selling was much more significant once it reached up towards that 50% move, and it has the NBI white. So now you're even getting a bifurcation within crypto, which just shows there's a whole lot of confusion out there. And it really presents some headaches, I think, for where fund money wants to go, because you're going to have to really start spreading that allocation around as you see, the potential of what's building, and it's not exactly positive at this particular stage. And you don't see any policy changes that would promote growth in any way, shape, or form. So when we look at it from our 50K, we had the buys that set up down here at the lows, and obviously it was spot on. But now we've got NBI white spike, so this is going to lead to a move back down to that 42 -5 range. It's just a question of once the sell signal is fully generated, which would be magenta under yellow and below that 33, which it's heading for pretty quickly. Intraday, when we go to a 5-minute chart, there was a lot of mixed action early on, and then shortly after, the little brief bounce, positive extreme, filled it back in, and then proceeded to make the new lows. And that persisted all the way towards the end of the day, and then post-market here, they just rallied it back up to the highs from the day. And you can see in the current post-market trade, it was a little mixed, but then as the later part of the day into Europe here is going on, it's a strong rally, created a positive extreme setups. It still has a little bit further to retrace down to like that 24 range, and from there we'll see what the current readings are. But this market's under a lot of pressure at this particular stage, and you've got to be able to recognize that's what we're seeing, and it's building up towards something a little bit more significant from the broader daily chart. So just be aware of that, and be cautious with your long setups unless it's a real significant clean buy blowout. Get some headwinds ahead. As always, though, look for me in the Skype chat. Trade well. We'll talk to you later.